The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. Happy Friday, just after 9 a.m. Eastern Time, and the final trading day of the year 2022. Wishing everybody a happy new year, a safe new year. Please, folks, have a great weekend. We got a long weekend. Markets closed from Monday. Gotta love it when you get back-to-back 3-day weekends. 4-day week of pretty slow action in terms of people on holiday, slow volatility in terms of volume, especially in the markets on some degree. And yeah, please be safe over the weekend. Have a great time with your family, with your friends. No drunk driving, folks. Unfortunately, the sad reality is that it's going to happen, and realize that people are going to die this weekend from drunk driving. It's that real. So please protect your family, protect your friends. You're out there having a good time. No drunk driving, period. End of sentence. Make it happen. And yeah, we'll see you back here on Tuesday, man. But we got one more day of trading. We got 23 minutes until the opening bell, and markets kicking the day off with some negative action this morning, right where we've been basically all year. You have the S&Ps right now negative by 25 points. You get the NASDAQ 100 negative by 110, 10,921. You get the Dow off 145, 33,227 this morning. And we got the Russell negative by 15 points. Quite the acceleration yesterday in the markets. And folks, I wouldn't read into this more than anything, as in it's almost meaningless action today and yesterday and the day before, and maybe even all this week. All right. Not meaningless, as in, of course, price matters, but it is meaningless in terms of the grand picture of the moves we've had this year, the risk that we are approaching coming into the year 2023. And boy, we got a big task ahead of ourselves in terms of still taming inflation. If you told the markets that we would still be at 6 to 7% inflation at the end of 2022, the Fed would still be on a hiking cycle. We've risen by 450 basis points, folks, and they're still on a hiking cycle, okay? There's a lot of headwinds in this market, and there's a lot of talk, folks, about what's going to come to roost when it comes to the economy. We talked about continuing jobless claims yesterday rising. So, yeah, we'll see where today goes. We have the S&Ps negative by 25 points to kick things off. We jump around to commodities. Crude negative 54 pennies, 77.86 for crude. We were trading down at 76.79 yesterday. Make it all the way to $79. We're back a bit. You got the gold contract up about $4 this morning at 18.30. We jump down to notes and bonds. I mean, look at it, folks. Can't deny what's happening, man. And check out that channel. An ode to our man Bud Rolfs, the channel master. Folks, if you didn't check out my dad's program yesterday, our man Bud Rolfs, he was a wonderful technician, an absolutely amazing person. He was a host and newsletter writer at TFNN going back 10 years ago, and he was a newsletter writer for 10, 15 years. Quite a presence. My dad's program yesterday, check it out. He did a great program. He aired a segment from about 3 years ago when Bud called in with my dad and I. He read some of Bud's poems. If you listen to Bud at all over the years, folks, check out the archive of my dad's program from yesterday. It was an awesome program. And yeah, every time I see these channels, man, I think of our man Bud Rolfs. And check out that channel line on the 10-year, man. Doesn't get much cleaner than that, folks. And I'm going to pull up a couple channel lines, and we'll talk about our man Bud Rolfs as we do. But yeah, we bounce off that channel line. It's been a one-way trip to lower prices since we have. And you're talking about higher yield over that time. And we're talking about a yield right now of 3.87%. Seems like we're on our way back to at least 4% on the 10-year as the market may be coming to grips with the fact that, hey, guess what? Maybe Chairman Powell is for real, man. Maybe Chairman Powell is for real when he says, hey, we need to see hard evidence, hard proof that we are convinced without a doubt that inflation is on its way back to 2%. When he said that, man, at that last press conference, I said, come on. He can't be serious, can he? And even if he's not serious at 2%, even needing proof that it's on its way back to 2.5% right now is quite a task. But he's putting up a hard face for the markets. And, we just traded from 115.11, folks. We're down 3.5 full points when you're talking about where we've been. And that is just over basically the last 17 days. On that, and it's quite a reversal, and it's right at that channel line, and man, it matches up perfectly. All right, what else we got? Well, let's talk about the 30-year, because guess what? The 30-year is doing the same exact thing, man. It makes sense that they're tied together, but keep those channels on your radar, folks, because, boy, if we ever get an acceleration to the lower boundary line, and it's not out of the realm, folks, all it means is that basically the market's going to start listening to Chairman Powell. This isn't some astronomical event that has to take place for the 10-year to drive down to a price point of 105. We were already at a 108 handle, folks, in October, okay? If you're thinking that the markets can't make a new low in price in terms of just a higher yield, well, I encourage you to look at the implied yield curve that the market's talking about versus where the Fed is talking about they want to be, because the market does not believe the Fed. And the Fed might be for real, man. Now, there's a lot of data that's going to come down the line over the next 3 or 6 months that's going to determine the path of the Fed. But we got a tall task ahead of ourselves. And the X factor here is that let's say they really do tame inflation, right? Let's say, and we're talking big picture, it's New Year's Eve, okay? But let's say they really do tame inflation, okay? And let's say it drops from 6% to 3% in a heartbeat, right? Let's say it drops from, I think, what was it? Core was 6% on the last number, and headline was maybe 7%. Ballparking, okay? We got a long way to go. Let's say in the next 3 to 6 months, boom, you're down at like 3.5%, okay? That's almost a best case scenario for inflation right now. What's happening to the economy if that's such a dramatic decrease? There's some tough stuff that has to happen in the economy to get that type of a nosedive in inflation, my opinion, okay? But keep your eye on that one, because that could hit stocks dramatically as well. There's a lot going on, man, and the S&P is negative 25 to kick things off. Let's jump around to some of the currencies. We jump over to the dollar index. Channel lines, folks. What do? A nice channel line. Now, it can be an art, not a science, okay? They don't match up exactly. The bottoms match up pretty perfectly on this trend line from the dollar, and that's going from basically February of this year at 94. You accelerate to a high of 114. You break out of that channel line in November, you come back and test it briefly, and then the slide begins, folks, from about 110 to 103. Looks like we may be plateauing a bit on the bottom side of that. Now, you want to see a nice channel line, man. Euro, US dollar does not get much cleaner than this, okay? Euro, US dollar. All year, we had dollar strength, euro weakness. Euro trades down to 95 late September. You break out of that channel line in October, but always would say, wait for the test, okay? The buy is not when it breaks out. You break out, you wait for the channel line test, and the beautiful part about this one, man, is look at that acceleration away from that channel line, man, November 4th. Now, even if you bought this thing towards the end of that big candle, okay, you're still talking about a move from basically parity to 107 almost on the euro right now. Again, doesn't get much cleaner than that, right? Let's see how the dollar yen. Dollar yen's in its own stratosphere in terms of that is a channel line, okay, and boom, you get another test, you get a rebound, you test that channel line, you accelerate lower. I mean, they're everywhere, man, on this, especially when you're talking about yields and currencies. Boy, they were trending in channels, and when you broke out of that channel, I mean, we probably got another channel in the dollar yen right now. We'll see if that holds, okay, because the dollar, we'll see if that holds as well. A lot of talk about it across the board. Well, we got a lot of trading in the year 2023. We got a lot of variables, and we jump over the VIX right now. VIX sitting pretty comfortably at 22.24. All things considered, on the lower price boundary of where we've been this year. Stay tuned, folks. 45 minutes left of the last program of 2022. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&Ps negative by 25 points. We get the NASDAQ 100 negative by 111. The Dow off 136. It's going to be a very light volume day, folks, which means we could see some fireworks in either direction when you got less participants in the market. But we'll be talking to our man Kevin Hincks again next week when we're back from vacation. He was saying last time we talked to him a week removed, saying, you know who doesn't take breaks, though, folks? Are computers. And they'll be trading no matter what. So we'll see where it goes, man, because he's right. We got a lot of computer automated trading, right? And we might get some momentum today, folks, because pretty remarkable in terms of you accelerate on Wednesday from 38.75, down 70 points on Wednesday, up 70 points on Thursday. We're going to do it again. We're going to go down 70 points. It's a two-way market right now, folks, as the markets, we'll see where we go. But we're right, basically. Now, let's take this one off here. We'll talk about the acceleration we had from yesterday on a Fibonacci basis. You take it up to the highs, and you're bumping right into the 50%, the 618 at about 38.34. And we'll see where we go from there. All right, what else we got going on? How about the numbers, man? Let's go over some of the numbers from Bloomberg. $18 trillion route, global stocks. Yeah, $18 trillion route. You know what is interesting, though, when I look at this, right? I was talking about this on my program yesterday. So $18 trillion, that is global stocks. Okay, that is for the year 2022. Apple alone, I was talking about in my program yesterday. Now, they got back some of that, okay? It's trading up $5 from the lows yesterday, maybe $4, call it really, from 126 to about 130. You're backing off a bit this morning with negative prices. But I was talking about the fact that Apple just traded down $50 from where it was in August. Apple's got 16 billion shares outstanding. So, yes, it was an $18 trillion global market rout for the full year. Apple alone in the last 3.5 months, though, represents basically 1/20th of every dollar lost for the entire year. Remarkable what this company has become. They're a $2 trillion company right now. They were about a $2.8 trillion company. Back it up to where it was in August on those prices, just to illustrate how important Apple is to markets worldwide. Yeah, almost 1/18th of all losses throughout the year on the global perspective were in Apple just in the last 100 days. It's quite a mammoth company, to put it lightly. But yeah, the headline, there it is. After $18 trillion rout, global stocks face more hurdles in 2023. Keep in mind, folks, we still have rate hikes coming down the line. We still have inflation, and we still have an economy that has yet to really feel the impact of those rate hikes. And that says it all. With a drop of more than 20%, the MSCI All-Country World Index on track for the worst performance since 2008 crisis. And there it is. You talk about a move, man. You talk about a move in a big way. Global bonds and stocks see biggest ever loss in market value. You're talking about $35 trillion on that chart. Yeah. And this is we talked about this earlier. Bulls looking ahead to next year might take solace in the fact that 2 consecutive down years are rare for the major equity markets. It's happened, though, folks. And when it happens, the second year is usually worse than the first. The S&P 500 has fallen for 2 straight years on just 4 occasions. The scary thing, though, is that when they do occur, drops in the second year tend to be deeper than the first. Not saying it's going to happen. No one knows what's going to happen next year, folks, but you better recognize that the probability that this occurs is greater than 0. And it's probably decently greater than 0. It's not one of those super outlier events that's like a 1 in 100 chance, okay? It is out there. It is a distinct possibility that we are not out of the woods yet, considering we have a market, folks, that's trading at 3,800. We just came off one of the greatest bull runs we've ever had, okay? Putting things back, I try and provide some context over and over. I mean, you think this is what bad looks like, okay? Bad was in 2000. When the S&Ps lost 50% of its overall value. That would bring us down to 2,400, folks, okay? And guess what? They did more than that in 2008. You went from 1555 down to 665, right? Man, what is that on a percentage basis? 1555, let's do it. What was that, 60% the index lost? 1555, that's an 890-point decline. On a 1555 index, that's a 57% loss, okay? And if you ever had a 50% loss, I'm not saying it's going to happen, but you got to put in context, folks, that we're basically only off 20% of the highs. While we lost 50% in the year 2000, we lost 58% in the year 2008, okay? And we're facing generational inflation, a generational pandemic, and a Fed that's on a hiking cycle that we haven't seen in my lifetime. So keep that for what it's worth, man, because that would be, if we ever get a 57% decline, that would be a 2,751-point pullback. And if you're coming off 4808, that would put the S&P at 2,000, man. That would put the S&P at 2,000 if you ever replicated 2008. I don't think that's going to happen at all, okay? But that would be almost a 50% pullback from where we're at right now. So make sure you're protected, make sure you're okay with things where they need to be, and make sure if this market trades down to at least 3,200, which I think is more than possible, okay, that you'll be okay, that you'll be positioned, you can ride out the storm, for lack of a better term. But we got a lot to get over in the next year, man, and we're going to talk about some of that as we go forward. $18 trillion, you talk about it, man. Yeah, you talk about the Fed's balance sheet, you talk about the hiking cycle that they're on. Now, the one saving grace here is that they're going to have some room to cut when eventually things might get bad, okay? That was one of the scariest things going on when you were marching from 2008 to 2015 to 2018, right? We came into the pandemic and the Fed had rates at 2%. So they really couldn't do much when already rates were near historic lows, okay? The Fed didn't have a lot to do with the economy when we already had a pretty light interest rate in terms of supporting the economy. At least we're going to be at a level that the Fed will be able to cut to provide some stimulus to the economy if the lag takes effect and the hit is really harder than it might be. And I think they're going to overshoot, man, because they have to, okay? Chairman Powell is not going to undershoot and be the chairman that ruined a generational retirement policy for a whole generation of retirees. It's not going to happen, man. Inflation is devastating. And I think the chairman knows that, and I think they are dead set on making sure that they get out of this no matter what happens, and we'll see where we go from there. All right, let's jump around to one of the other articles I had pulled up here. Just talking about this one's headline, the charts that show the world economy's turbulent course over 2022. So let's jump through some of these as we come into this first break. We'll come back for the open. Inflation. Now, this is interesting because we got a little bit of an ebb. okay? June, this is news stories on inflation jumped as consumer prices did. Boy, they really took hold, man. Look at that. Look at where it starts. It almost starts exactly at the beginning of last year, right? You're getting maybe 40,000 inflation, quote unquote, stories per month. Well, yeah, all the way up to 250,000. It's somewhat anecdotal data, folks. I wouldn't be trading off it, but pay attention to that. The only thing is that maybe that's a saving grace, that it's subsiding a bit, or the other side of that is maybe they're not writing as many articles because everybody knows it already. It's been written. We all know we're living it, okay? Price shock. Year-over-year change in consumer prices. For the world, in red, developed countries, year-on-year changes in consumer prices. Folks, there's not even a pullback yet. And that's the blue developed countries. Not even a pullback yet. Dicey, 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 man. When you talk about, yes, maybe we have a rollover. But folks, if that takes time to pull back, you're talking about 2 years it might take, right? Stay tuned, folks. We'll finish this up. We'll come back for the open. Don't go away.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You got an S&P down about 25 points to kick things off at a price point of 38.46. That's about 2/3% in the red. We got the NASDAQ 100 down a full percent, 10,919. Let's jump around to some of the FANG stocks. We'll kick it off with Apple, down about 1% right now with the NASDAQ 100. We jump over to Amazon. Tough year for Amazon, to say the least, off 1.2%. We jump to Microsoft shares. Microsoft down 1% right now to kick things off. We jump to Google. Google off 1.8% right now. We jump to Meta. You talk about tough years, off about 1.8%. Maybe the toughest of years. Tesla down 0.7%. They got quite a bid yesterday, trading from about 110 to almost 123 or so. We're trading right now at 121. The Tesla story will continue in 2023 in some fashion, I'm sure. You jump over to Netflix shares. Netflix acceleration yesterday. You're still off 1.8%. And jumping around to some of those headlines. So first, back to the article I was talking about, the $18 trillion route. Just taking a look at some of these numbers, man. Tech stocks across the board. Check out the percentages year to date. Amazon, Airbnb, Netflix, PayPal, Zoom, Meta, Tesla, Rivian, all down greater than 50%, up to 68 for Tesla. Rivian, man. That's a story and a half. Rivian. What is Rivian? Rivian? RIVN. Folks, you want a lesson in getting ahead of itself? Look at the way they push this out to the public, man. This stock was pre-revenue valued at like $100 billion. Okay, pre-revenue. Anybody tells you ever again, what are they at right now? So they're at 17 billion right now. Look at that. So it was more than that. They're at 17 billion right now at 18 bucks. And you got up to 179, which means this company was pushing 160, 170 billion dollar market cap pre-revenue. Yeah, that's a story and a lesson that we can all learn, folks. Even if you take some of the price point that it chopped around near 100, right? You're talking about this thing was near $100 billion market cap for a period of a couple months almost before it really pulled back to more normal prices. And we get the market trading a little bit lower on the open, but we'll see where we go from here. So jumping back to some of the 10 different charts they were talking about here in Bloomberg, okay? We talked about news stories for inflation, anecdotal data. We talked about consumer prices. No rollover just yet. All we got is a plateau, okay? Central bank benchmark rates, we're all familiar. The rates that have been rising in pretty dramatic fashion. You talk about the GDP, okay? This is the world GDP from previous years. We tanked in 2020. You had quite the acceleration in 2021. And these numbers hovering right at around 3%. Not the end of the world if that plays out. The blue is in forecast. The black is what we already know for actual numbers that have come out. We had the war. Okay, you talk about commodity prices. Now, thankfully, that seems to have negated or pulled back to more reasonable prices, at least in terms of we're over the hump. Oil, back to where we were December of 2021, essentially. Wheat, back to where we are. Natural gas. Boy, you watch out for natural gas. My dad was talking about that one yesterday. You watch out. The dollar. Well, the U.S. was ahead of everybody, folks. We got the strongest economy out there. We were able to raise rates in dramatic fashion while some of the other economies, Europe, England, and so forth, have struggled to raise rates, worried about what it would do to their economy. The dollar gained dramatic strength over that time. Started to pull back a bit, but we'll see if that's a trend that continues. Distressed debt, yeah. This is going to be one that maybe carries into next year. You got Egypt, Pakistan, all of them, right? Distressed debt. Loans dispersed under general resources account facilities. You are rising in dramatic fashion, man, to a record distressed debt. And supply chains. So this one hopefully helping what we have going on. The New York Fed Index of Supply Chain Stress, undeniable that peaked, folks. It did. It peaked in what? When is that? Yeah, late 2021. Now, this is part of the reason why transitory probably became such a vogue statement until it wasn't, because there were a lot of supply chain stresses which were hitting this economy. Well, it looks like there was a lot more going on than just that, but at least it looks like supply chain stresses have started to regress a bit. Labor strength, man. One of the surprises has been the resilience of labor markets. Yeah, surprises, exactly. That is a surprise. It just keeps going, folks. The estimate last month was 200. We're at 263. Just strength across the board for most of this year. That's the change in non-farm payrolls. And this is not what a recession looks like, folks. All we continue to do is add jobs, hundreds and hundreds of thousands of them. Yeah. Housing busts, okay? Now, this is where the rates have really started to take hold. But even the U.S., okay, the 2022 estimate, 5.5%. That's the year-over-year change in housing prices. Now, it's pulled back in the second half of the year. We were still accelerating in the beginning of the year, okay? But since rates have risen, that's hurt buying power Okay, we're all only worth what we can sign for, man, in a market where you got rates now pushing 4.5%. You got mortgage rates at almost 7%. But even with that going on, the forecast next year is only a 2.5% decline, folks. If that's the case, no problem there, because housing prices have gone up 100% over the period of 3 or 4 years in some markets. Remarkable. Yeah, and a lot of uncertainty as we go forward, to say the least, and we'll leave it there for right now. All right, what else we got going on? Let's jump around. How about Southwest? All right, let's take a look at Southwest. LUV holding steady, maybe finally. They catch a little bit of a bid yesterday. Maybe that's their trough for Southwest. Quite the pullback from $40 to $32. You come into those lows we had from October. You're up a bit. And yeah, the headline is putting it lightly. Who doesn't need to hear that certainly what's happening with Southwest will affect their profit going forward? They're canceling more flights than anybody by dramatic fashion, folks. And so, yeah, they're certainly will hit its fourth quarter results, executive said Thursday. Well, thanks for the info. Yeah, and they said that, you know, a normal schedule on Friday, 39 flights canceled, down from more than 2,300 on Thursday. So it looks like they might be finally coming out of the woodworks. We had Tigers talking about in the den early this week, I guess, saying, yeah, if they were flying anywhere this week, it was almost impossible. It was like $4,000, $7,000, something crazy to get a flight because everything was so screwed up. But just go forward a week or two, and it was back down to more realistic prices because things have normalized, to put it lightly. Yeah, but not much love, man. We'll see how it goes. A lot of people. Such a bummer when you think about the holiday, right? Tough holiday season for travel no matter what. But, boy, when you talk about, you know, your flight gets canceled and then they can't get you there for a week or something like that, that's not usually what people are signing up for. All right, let's talk a little bit of Platinum. Platinum set for the best quarter since 2008 on supply concerns, rising another 5% yesterday to over $1,000, up 22% compared to the start of just the quarter. And it's up 9% this year. Gold lost 1%. Silver up around 3%. Palladium fallen 4%. So you can see Platinum a big winner there. And they talk about here, yeah, China has imported excessive amounts of platinum since 2019, which has left a limited above ground supply for the rest of the world. It's a battle for commodities, folks. That's how the world works. It's always been a battle for commodities. And that's why, folks, when you hear any politician say they want a weak dollar, okay, I mean, you heard it many times recently. And it's not just a Republican or Democratic thing, okay? People who are in power in general in the short term want a weak dollar because it gives us buying power overseas, okay? But in general, folks, you want strength in the currency you hold because commodities, and guess what? Chips are becoming a commodity, man. Commodities run the world. They always have. Stay tuned, folks. S&P's down 19. We got some more stuff to go over when we get back. 3 minutes, right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps down by 28 points right now. NASDAQ 100 off 123. The Dow off about 180. Jumping back to some of the themes of 2022. Consumer prices, food prices. How about egg prices, right? Eggs, milk, some of those. Why egg prices surged in 2022. Those elevated costs could last into the first quarter of 2023, expert says. Well, they might last longer than that. Who knows, man? But there's more going on in this economy than just inflation because of stimulus or whatever it is, right? Egg prices up 50% in the past year. And folks, eggs are some of the healthiest things out there for you, man. They really are. Bird flu, primary culprit. That's somebody saying, okay? Millions of egg-laying hens died in 2022 as a result of the deadliest outbreak of avian flu in U.S. history. I mean, some of this stuff just gets lost in terms of so much stuff going on, man. We got a war between Ukraine and Russia going on. We got generational inflation. We have the pandemic still going on. We got China going on, right? Not enough time in the news to cover a bird flu. But guess what? It matters, folks. Perhaps counterintuitively, chicken prices have been declining. Chickens raised for meat consumption aren't as affected by the bird flu. Not sure how that works, but nonetheless. Check it out. Eggs, that's the top billing, man. Here's the inflation breakdown for last month in one chart. These are some of the core categories plus other items with notable year-over-year numbers, okay? Eggs, 50%. Yeah, butter and margarine. That gets a lot of attention, too, because these are staples. These are staples everybody buys, folks. Eggs, butter, cereals, right? Wheat was a big one. That one probably normalizing a bit. Pet food, milk up there about 15%. Electricity, 14%. Health insurance, 13.5. Seems like health insurance is always rocketing up about 14%. Poultry, 13%. Energy, 13%. Food at home, 12% overall. It's just everywhere, man. New vehicles, 7%. Rent of shelter, 7%. All items included, 7%. All items less food and energy, 6%. There were the numbers I was talking about, 6 to 7%. Okay, so you got core number at 6. You have all the items at 7.1. When you talk about declining numbers, smartphones and televisions and car rentals and beef and veal. Yeah, where's the beef? Got to be eating some beef. Beef's good. Just keep it in moderation. That would be my take. That's how I feel. That's how I feel best. I do love a good burger. I love a good steak, man. But red meat in general, you eat too much of it, it doesn't feel good for my body. Everybody has their own perspective. Technology, computers down a little bit. Computers and smart home assistants. I mean, everybody probably that needed a computer when the pandemic hit probably bought one in the year 2021, man. Used cars down, right? Interesting how that plays out in terms of used cars down with all the talk of cars that carry through the year 2021 and beyond. But yeah, bird flu they're talking about was a big one in there. About 58 million birds have been affected by the avian flu this year, according to the Department of Agriculture. That's as December 28th, and these figures include birds such as turkeys and ducks as well. Yeah, so there you go. Consumer prices, man, that's what we're talking about. Now, here's the thing. All the items are pulling back, okay? But you take out food and energy, and we don't really have a decrease yet. That's the biggest one of all. That is not what Chairman Powell is looking for, man, okay? He is looking for a dramatic decrease in the core numbers, which take out food and energy, and he's looking for a decrease that makes him certain that we're on our way back to 2%. I don't know if that's what that chart shows. I'll put it, but that's not what that chart shows. And that chart, folks, we got a long way to go until we're sure we're going back to 2%. Okay, a long way to go, in my opinion. About 40 million egg-laying hens have died this year. 40 million. There were 375 million total. Layers is as they call them. Layers. It's just like they're just processing machines, which is down 5% from last year. Egg quantity has declined as well. 8.9 billion eggs were produced in November, down from 9.7 billion. That's straight up supply and demand, man. What's that? That's a decline of more than 5%. What's that? 800 million egg decline off of 9.7 billion. What's that? 7%, 8%. Yeah, this doesn't even get enough coverage because everybody just says, inflation's raging, right? Have you seen the price of butter and eggs? Well, there's other factors going on here, man. It's a supply disruption, an act of God type stuff. That's somebody talking about unprecedented. Price pressures may be easing, but folks, as we know, they're still up 2.3% just in the month of November and 10.1% in October. Big numbers across the board. But chicken, they've been falling. Chicken prices retreated in October and November. Chicken raised for meat consumption. So we got layers are the ones popping out eggs, and we got broilers are the ones that are made for meat consumption, aren't affected by the avian flu to the same extent. Two totally different styles of production, totally different breeds of bird. It's interesting. Learn a lot about chicken and eggs. The life cycle of a broiler is much shorter, anywhere from 5.5 weeks to 9 weeks. That's amazing, man. These poor birds. Yes, that's how life goes, man. 5.5 weeks to 9 weeks, man. They hatch them, they boost them up, they get them thick enough to sell them as chicken, and then they pop them out, and that's it. Wow, look at this. So the life cycle of a broiler is much shorter. That cycle can be upwards of 100 weeks for an egg-laying hen. It can take about 5 to 6 months for layers just to reach full productivity. The latter are therefore much more susceptible to bird flu since farmers must keep them alive for, 6 months at a time versus 5 to 9 weeks. Amazing. 851 million broiler chicks hatched in October, up 5% from the year prior. Look at that. So you actually have an increasingly number of broilers. Meanwhile, you got layers, the ones you got to have out there because they're laying the eggs, right? They got to keep them alive for 5 to 6 months, and that's tough when you got this huge avian flu going across. And you got broiler production rising 2% in 2023. Despite the recent retreat, chicken prices are still up 12% compared to October 2021. Well, that's just straight up inflation hitting everybody, maybe. Well, there you go. You got feed. Yeah, the feed. You got to feed these chicken, and that's gotten expensive, man. Corn and soybeans contributed to the inflation. So there's more chickens, but guess what? You got to feed them, and you got to feed them with stuff that costs more. Let's jump to oil. Oil set for a yearly gain as investors look ahead to a China rebound. This one's going to be like a big wild card coming up. We got a lot of wild cards in 2023, man. S&P is selling off a bit right now. We got crude at about $79. S&P is trading at $38.29. We put it back to 15-minute. It's a pretty quick drop-off, man. Markets held their own for about 15 minutes, and now we've dropped about 15 points just in the last 4 minutes since this S&P came into that 945 bar. Be careful on that one, man. Oil is set to end a volatile year modestly higher. Isn't that remarkable? Okay, check out crude. $79. And I say remarkable as in it's only modestly. Okay? Yeah, we came into the year about $74. We're closing out at 78. This is why the headline number does not mean as much on inflation, folks, okay? Don't pay attention to that headline number of inflation rolling over. Of course it's rolling over. It includes energy. That's all you need to know. It includes food as well, okay? But of course it's rolling over. pay attention to the core, because that's what the Fed's going to be paying attention to. Pretty remarkable that we end the year almost where we started it in crude. Meanwhile, you're up to $130, you're $120 left and right. Stay tuned, folks. One more segment of the program this year. We'll be right back in 3 minutes. Don't go away.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps down 35 points right now. We accelerate just under the 618 of that move we had from yesterday. You're getting volatility in both directions. Be careful out there today, folks, just in terms of the market. You're going to see some irrational behavior. You're going to see very light markets. You're going to see computer trading in there. And you're going to see everybody leaving their desk by about noon Eastern time. Not here, though, because we got my dad finishing things up. He'll be live till 4 o'clock today, folks. But yeah, it's going to be light markets in terms of the volatility, the volume in this market. So anything can happen, man. Pretty interesting to see how things go on the final trading day, considering, do you have any, tax harvesting? Are you looking for losses? Are people in a tax account, right? Harvesting some of those losses? Not a bad idea, man. It's not like you expect the market to pop next month. Maybe you harvest those losses. You can always buy back into that position, lock in that loss for 2022. A little bit different than usual, though, especially different than where we were last year, where all the talk was, are people going to wait until 2022 to sell, right? Guess what? Seems like that's what they did, man, in pretty dramatic fashion. All right, jumping around to a couple more articles we had pulled up. Kathy Wood, grim 2022 is almost over. Next year also looks bad, says Bloomberg. Here's the part I wanted to do. Despite the year she's had, she still has inflows of $1.3 billion. She still has inflows this year. That is remarkable when you think about it, folks. Now, it doesn't compare to what she has in previous years. She took in $1.3 billion. Let me get down to the number. Come on. Yes, $1.3 billion this year, underscoring the cult following. Okay, the inflows, however, far cry from the $4.6 and $9.6 billion she took in 2021 and 2020. The one thing I'll say is, if you're investing longer term, you should have like a 5%, a 5-year plan, which is what she touts. Okay, but folks, on a 5-year plan, she's losing money, and that's over one of the greatest generational shifts to technology over our time, right? Work from home, telehealth, all of that stuff. So be careful in there if you don't think it can go lower. It definitely can. Folks, thanks so much for starting your trading day with me. And please, again, have a safe weekend. Have a great New Year's. Enjoy your friends and family, and no drunk driving. We'll see you back here Tuesday. And stay tuned, folks. We got our man Basil up next. Have a great one, folks. We'll see you in 2023.